So hello there. Once again, welcome back to this great channel. You are listening to Lucid Plug, and it's going to take like 10 minutes, 10 to 15 minutes of your time, and I will simply try and observe with you how was seeing the market today. So this here is my daily trading journal. Okay, and it's open to the public so that anybody who needs it can learn from it, and I am also learning from it too. Okay, so don't try to think that I'm not watching my own videos. I know that's crazy. So today I'll be going through the macros and overlaying on top of PD arrays. So the PD array I'll be having is these here. These, if you can observe closely here, this is Monday 13th April. That's we have these closed here at 4,740 and these open here at on Tuesday 4,446.920. So we have these levels there. Those are fib levels. You can take a screenshot of that. Okay, and this one here. I also have these red dash lines here, dashed lines. Uh, that is the weekly sell side imbalance, buy side inefficiency. Weekly sell side imbalance, buy side inefficiency. So what my eye goes straight to is the consequent encroachment. That's the middle. That's the center. That's the equilibrium part of it. So this one here. So watch out for that level there. Okay, this level here, this one here. Okay, this dashed red level there, and also these levels here. And I also have the new week opening up there. So we closed there on Friday at 4,715.715, and we open at 4,687.430. So from the closing to the open there on Sunday evening, we have the new week opening up. Okay, so today is on Monday 11th May 2026. The time right now is 3:02 p.m. in New York time, but in Kenyan time that's 10:02 p.m. Quickly go to the 1 minute time frame because that's where the business is. Business as usual. Mm, beautiful. So what's your job here? Looking for the macros. What's the macro? The last 10 minutes and the first 10 minutes of an hour candlestick. Okay. So at the last 10 minutes of every hour and the beginning of and the first 10 minutes of every hour, we have the macro. That's where you see these random price deliveries. So we have there. See that there? Buy side imbalance, sell side inefficiency. This high here, a break of structure there, price being held there at a random place, push lower, and at this reversal here, it's in the macro time. See the candlesticks respecting the consequent encroachment of that wicks, the wicks. You see the wick doing the damage here, taking out these here, this high here, these smooth highs here. Okay, So you can utilize these kind of price movements there. Let's go to the second macro. So the first macro 7:50 to 8:10 a.m. That is New York time. New York time. The Eastern time. So I have the sell side imbalance, buy side inefficiency. Do you see how price uses that there? Just remember that not so long ago we talked about these new week opening gap here. This one here. Okay. So we are going to observe how price is printing on these levels here. My main aim is to help me or show me where price wants to deliver to. So we have this level here, the lower level here, 4,687.430. You see price using that. Reclaimed buy side imbalance, sell side inefficiency. You see that there. I would have put this one there, another reclaimed there. You see that there? Do you see this level there? What's the time? 8:50 a.m. What's my what's my model? Inversion fair value gap. That's my model. That's beautiful. We got that there. Broadly random. See that there? Do you see these things? Do you see that? And whenever you see these kind of behavior here, the these aggressive break above, just know that we are gone. We are never coming back for you. If you have not secured your contract, you we are not coming back for you. So that's the second macro. Third macro on a random level there, a random level. See that? Consequent encroachment of that weekly sell side imbalance. And the hmm so you remember the new day opening gap on Tuesday? That's the level, the upper level there. That's random. Buy side imbalance is side inefficiency. A breaker. We have this retracement here in the macro time, and we have this beautiful delivery. I'm also pointing out on this here. This is the this is the third macro, fourth macro. We have this level there. The inversion fair value gap still being used there. That's concept. We have also the same concept here. Just take your time, pause the video, observe these levels there. Do you see this here? Do you see this here? I God damn, this is beautiful. Do you see here? Do you see there? And we have this here. The inversion fair value gap still being utilized. So this is basically the model I've choose because the price has already confirmed that it's moving to that direction. You just have to add to the winners. Come add to the winners. So we have there, see that there, and there, and we have this beautiful delivery here. Um, After the tone was set at the macro time. So what I said is that after you have um short your entries in the macro time, just after the macro time, make sure that you either have taken out your partials or your positions are at break even. Okay, and then you can let the winners run. So that is basically what my presentation was all about, the macros and these levels there. Um, utilizing all of these levels here, you can all feast your eyes. So once again, thank you for listening. This is Lucid Plug. Um, what that was basically what I wanted to show you. If what would a beginner come and want to look for in these markets? Okay, these PD arrays, you grid them. Also, incorporate the concept of time, because this algorithm is we say price is not random. It engineers, it seeks, and then it delivers. So this whole concept of the algorithm is under operating under time and price. That's the only thing. That's the only thing. You see this one here? I could keep doing this, man. I could keep doing that, but I don't want to. I just don't want to.